Let's talk about heikin ashi candles and how you can utilize them to their full advantage. And when I first started trading, I utilized these in a specific way, and I'm going to explain to you guys how I did this because I was the worst about staying in trades. So if you guys struggle to stay in your trade and let it actually play out, then this is the video for you. So make sure you guys are subscribed, you like this video, and if you have any questions or any ideas for future videos, put it in the comments so I can make those videos or get your questions answered for you guys. So when we look at heikin ashi candles, today is not the best example of this because if we go to regular candlestick, see that this was solid push bottom side. So let's go to a different day. Let's go to yesterday at the time of filming this. And let's look at this and say, okay, and dependent on your trading style, are you a zone-to-zone trader? Are you a breakout trader? What are your confluences for getting into a trade? Why would you look to take this trade? Could you potentially say that either this was a bear flag or what else could this be? A reaction at a zone. Potentially was one of our zones that we would have had marked up. This is a reaction happening here. So we have not one, but two confluences here. It has broken the bear flag, and then it also has rejected out of one of our key levels. Okay, so where potentially could you be taking the trade, right? Always looking for our roadmap, always asking ourselves, where could we be going? How do we figure that out? Okay, we come and we look for previous highs. So this was a key level. Because prices come here multiple times, look across the board. Do we see that price has come to this area as well? Yes, but it's a little bit scattered. Of course, we're looking at recent price action. Can we say this is an area? Yes, prices stuttered out here, created a consolidation point. Prices come here multiple times. If we scroll back, do we see that prices come times? Yes. Okay. So, and then we could make this also level. And with this being the final key level. Okay, so if we're looking at yesterday's price action and we're looking at where we potentially might go going. Yes, we have two confluences here, and you are somebody who struggles to stay in your trade. How are you going to use heikin ashi to your advantage to stay into this trade? Well, then take a look at it. Go ahead and you click over to your heikin ashi candles. And now you are looking at how this is beneficial to you. So, under the understanding that you are going to, one, look for it to come to your zone, and two, break above your zone and have continuation. Yes, this would have probably been a little hesitation here because it's come to this zone and it's rejected multiple times. But where are your price targets? Yeah, that could have been one of your price targets, sure. Okay, so this would have been our long position. Starting down here, targeting this high, which was points. That's not a bad trade by any means, but for you to stay in that trade, let's go back and let's look at the candlesticks and look at what you could have potentially had happen. And I see this happen a lot, and it happens with some of my students on our team, is they will close the trade anytime they see a large red candle. So you could have gotten right here, and then it pulls back, and you panic, and you close your trade, right? So then you don't get your full risk to reward. You're down, or you're not necessarily down, right? Okay, so this happens, right? And close it out, instead of getting about 60 points, close it out only for 30 points. So you just cut your profit in half. Okay, it's going back up, so you get back in, and then you're on this candle. What happens again? The red candle, you again. Okay, what happens again? You get back in because it's going up, and then it pushes back down even further this time. And depending on where you're getting in and out of these trades, you can really do some damage to your drawdown if you are in a prop firm challenge, if you are in a funded account and you only have a specific drawdown. Even if you are in your personal account and you are doing this to yourself where you're in and out, in and out, in and out, doing this and not giving yourself the full room for this trade to play out to those 85 points, turning this on, but again, turning this on, going back to where we were, and just letting the trade play. Yes, that might have spooked you a little bit, this one, but letting that just play out and realizing, okay, green, 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 could you have closed it right here at the top wick right there? Yeah, there's nothing wrong with that either, because you could say, okay, well, it almost tapped my zone. I mean, that's still 80 points as opposed to opening and closing, if you are kind of understanding what I'm saying. Okay, so now to go back to our regular candlesticks, and we go over here and say that, oh wow, it finally broke this zone. You're looking for your entry criteria, the break above, the pullback, or whatever you trade, or if you trade breakout, it finally broke the zone, you're getting in for another position. This is that same idea. You're going to get into another long position here. You're looking at price, and maybe you're like, okay, where am I targeting? Obviously, I'm targeting way up here. Could it potentially get there, right? Yesterday was just like a rally to the upside, just this push upwards. But you never know, right? If we knew, then we'd all be millionaire billionaires, but we don't know. So we have to use our correct judgment and kind of let our trades play. But this is that same scenario. And this is where you can catch yourself again doing those same things, opening and closing. So got into this trade, it broke out right here, and then it pulls all the way back and you panic and close the trade. Okay? Again, you're like, well, maybe it just pulled back to the level and I'm just going to keep going. Then it starts to pull it back, you panic. So same idea. How do you mitigate it with using the heikin ashi? Look. Boom. Mitigate this by saying you're in the trade above here and then waiting for the trade to play out. Yeah, you would have maybe had a few little scary moments with the heikin ashi looking like this, but for the most part, it's all green. And then you could tell yourself, okay, once I start to get close to my zone, the minute it starts to flip red, either get out for a nice profit, which like 80 points again, or you're in have strong conviction and use a 100-point move. So that is a way to kind of mitigate this. There's also the idea of the bear flag method with the heikin ashi mixed in. So when you're thinking about doing bear flags, right, and we've kind of discussed this in other videos, there is another video on my channel about bear flags, how to look at them, but very similar, a little bit easier sometimes for people to see these bear flags with the heikin ashi turned on. Clearly, beautiful bear flag here. Boom, push to the bottom side. How can we see this on other, around on 1 minute? Okay, can we see this happen where else? Yes, bear flag, again, zone. So, however you want to trade and however you see the market, the heikin ashi can kind of keep you in trades a little bit longer and help you hold trades. Again, get potential bear flag right here. Green, flip to red, pushing down. How can you in another New York session? Look, you could say, and we did a video on this, but you could say potentially like this is the entire bear flag here. Yes. You're waiting for the touches, pushes all the way down at open, and then look, solid push to the upside. This is on our 2 minute, and no red flips here. So this would have been a great trading day if you want to trade this way, right? Everybody views the market a little bit different, so it's really dependent on you and your style of trading. What could you be targeting? Maybe this high right here, because this essentially would have been a zone. Boom, right to it. 130-point move. Does this sound and look easier than it actually is? Absolutely, because hindsight is 20/20. Looking at these trades this way, going back and being like, oh yeah, that's simple. That is not what happens in real market conditions. As easy as this looks, it is not that easy when you're actually trading. being able to take a step back and actually view the market and understand potentially where you're going and why you're going there is going to save you in the long run. So, Asian session. Could you trade the same in Asian session? But you could breakouts here, right? This could be a breakout because it's created this level of consolidation. Tell yourself, as soon as this starts to break down, I'm taking the short position. Starts breaking down, boom, short position. Could you do this in London session? Idea, right? Bear flag right here. Bear flag, push the bottom side, right? All of this, the same thing. This happens every single day on every single time frame too. Everything's fractal. So just staying in the trades longer and being able to kind of see this play out. Could you see this with regular candlesticks? Yes. But the idea being that you're trying to stay in trades longer. So could that be a way to have this play out? Absolutely. Watch it play out. Would you potentially have gotten out here? And be honest with yourself. Would you have gotten out here? Probably, right? Because it back up and you're watching numbers stack. So that is the psychology part of trading. Seeing all these numbers start to load up and then they go away, you panic. Instantly in your head, somebody's taking your money from you. You're going to close the trade. So being able to have something like this at your disposal and being able to be like, okay, I'm not going to panic. I'm going to wait for a flip of, and I'm going to try to wait for my zone or try to wait for, whatever my profit target was. It was this candle low. So that's where price target was sitting. I don't know. This was the zone we had previously drawn. So always asking your questions to yourself, even doing it out loud and saying, where could price be going? Why am I going to be wherever? Or how am I going to mitigate not closing out my trades 100,000 times? So holding on to that capital. So like I said in the beginning of the video, guys, if you have questions, drop it in the comments. If you have any ideas for future videos, let me know. But I will see you in the next video.